So good morning, Europe. Good afternoon, Southeast Asia, and welcome to our webinar on FinTech. My name is Marta Bettinazzi, and I'm going to be the moderator today. I hope you can see my slides now. Before we start, I would like to briefly introduce you to the webinar tools, because we are looking forward to have you involved in the conversation. So if you have any question, you can type it in the box, and it will be answered at the end of the section. If it's not answered, you can we will try to follow up via email, but we are looking for an interactive and positive discussion at the end, so the questions are more than welcome. Today we will have two speakers, one from the industry that is from Aspire and EuroCham Vietnam, and the other one is a lawyer and is an expert from the Southeast Asia Helpdesk, and is also a lawyer at Marks & Clerk in Singapore. Just to give you a very short introduction on our two speakers, Stefano is a double qualified attorney in Italy and in New York. Is now the country manager of Aspire, but so a fintech company in Vietnam. But before this, he was also a lawyer. And both in Vietnam and in Italy, he owns a master in law in Berkeley and a PhD in Pavia. And also he has been a postdoc researcher in New York and in Germany. And so I think this is more than enough to say that he's highly qualified to talk to you today. And as for Jonas, is our speaker from the IP sector. Is a patent attorney in UK, Europe, and is registered also in Singapore. He specialized in electronics patent, and he has a particular expertise in drafting and prosecuting patent application. He's also he also speaks Japanese and is used to visit Japan quite often. It's something I always love about his bio. And but it's not the reason he's here. He joined the office of Marks & Clerk in 2008 and is from 2015 in Singapore. And he was IP Rising Stars in 2018 in managing intellectual property, and we are glad to have him among our experts since 2019. So, as for the agenda of today, we will have, first of all, a short introduction on the Southeast Asia Helpdesk services, and then we will have Stefano talking about how FinTech is doing in Southeast Asia, and then we will go into the IP part of the presentation about what it's important to watch for in the sector, and then we will leave the floor for questions. Briefly, what are our services about? We are a EU-funded project, and we offer an inquiry helpline for questions from European SMEs that wants to do business in Southeast Asia. We also offer training and workshop in person, and now, as you can see, online. But online, you can also find our e-learning models that are quite nice and interactive. You can also find all the recording of past webinars also on our website, and on our website you also can access the newsletter, the blog, and the guides and fact sheets that have been recently updated, including the one on FinTech that we are discussing today. At the end, there will be all the information. So with no further ado, I will leave the floor to Stefano. So he will guide you through the industry.
Thank you, Marta. Can you see my screen?
Yes.
Okay, perfect. So welcome everyone to this webinar. It's a pleasure to be talking to you. As Marta mentioned, I joined a fintech startup a year ago in a management role, but I've been working in fintech from the legal side for a few years now, always in Southeast Asia. I'll try to give you a little bit of an overview of where we stand in terms of fintechs in Southeast Asia nowadays, and then Jonas will be able to guide us through the legal aspects and especially IP protection. Let's first start with a very general overview of. Sorry, can you see my screen? Can you see the slide? Okay. A very general overview of what fintech is. When we talk about fintech, obviously we are talking about companies that use technology in the financial and insurance sector to provide services that are more customer-centered and customer-focused. And that's why they are said to be disruptive, because they are bringing a new approach to an industry that obviously has been around for hundreds, if not thousands of years. There are several sectors in which fintech companies are more and more active, but it's even difficult to categorize, because it's difficult to even identify when a company falls within one sector or more than one. Most operate cross-sectoral. Many go from one sector to another. So it's a rapidly evolving landscape. I've tried to put here some key focus of fintechs, but it's mostly to orient us. These are not like real categories. And new keep popping up, right? Every year or so, there is a new category of fintech services that is being provided. So obviously payments is an important one. This is something that we are mostly now used to, no longer using cash, but using digital payments. So something that is not exactly new anymore, but still has a lot of potential, especially in a region like Southeast Asia, where digital payments are not that widespread yet, and therefore the potential for penetration in rural areas, for example, is extremely high. We've the platforms that do crowdfunding and crowd lending, whether to help small companies get the debt that they need in order to operate, or to, for example, finance startups, and so collect money from the general public and channel it to companies that need it. This is obviously something that would be extremely labor intensive if it wasn't because of the technological support that certain fintechs provide. We have digital banking. Well, this is a very broad category that encompasses many companies that decide to provide more than one service, whether it's just payment or lending, but they combine more, and so end up starting operating in a way that resembles traditional banks, but again with a different approach: technology first, customers first. We have a number of companies that are into the data and credit scoring and management. Basically, they help companies and financial institutions to process data and understand where they should direct their resources, who they should finance and who they should not. We have some companies that do directly lending, whether this is directed to consumers, right, or companies. We have a POS. We have comparison platform. This is also an interesting category that I think should be mentioned by itself. So those companies that compare services provided by traditional operators, whether it's banks or insurance companies, and allow customers through technology to compare among different choices and find the best deal or the most tailored one. Then there is the blockchain and cryptocurrencies universe, which is also a standalone, kind of its separate ecosystem. Extremely promising, and we've seen a lot of investment in this, especially in recent years. And again, the applications of these are huge, right? So it's silly almost to think that it's just one category. It's much more than that. We have wealth management and also a number of companies that provide support to help accounting and cash flow management in companies or for individuals for personal financing. And then InsurTech, which is another booming sector at the moment. I think this is a very broad overview, but that gives us an idea of where we stand. Obviously, there is a classic distinction. There are some fintech startups and companies that are focused on consumer directly, and so on serving individuals. Other instead that work with companies, and this is obviously a big distinction that works for every kind of player, but applies obviously also to fintech, and it's good to keep it in mind because the characteristic of fintechs that are dealing with consumers are very different from those that are dealing with companies. Normally, B2C can expand very, very fast, and so they normally have a explosive growth trend. B2B, it's different. It's more of a slower growth because you cannot access millions of consumers instantly like a B2C fintech can do with technology. But there is also, again, a lot of in between. For example, there are fintech companies that focus on small, medium enterprises, micro enterprises. And here we are talking about maybe hundreds of thousands, if not the millions of players in this region. And so they can still have a very rapid and impressive growth. One particular sector that I think is worth looking at in a little bit more detail is fintech lending, especially now because, as we know, the traditional banking system and lending system is under a lot of stress because of COVID. And we have seen an emergence of opportunities for fintechs in the lending space. We have seen the American government, for example, relying on fintechs to provide the capillary diffusion of their aid packages for companies and for individuals. And so to make sure that all the money that's being pumped in the American economy at the moment is actually distributed where it's needed. And they understand that banks can do this, but that fintech can do this better, or at least can complement what banks can do. And we're seeing similar trends in other developed jurisdictions, such as Singapore, to name a close one. So fintech lending, that's why we should talk about it. And here also there are a lot of subsectors and different trends. Purchase financing, basically helping companies to pay their suppliers, advancing their money, and so helping them with their cash flow, something that is becoming extremely important now during COVID times, especially in certain sectors. And then the B2C version of this, which is the buy now, pay later. Again, plenty of startups are doing this, increasing the purchase capacity of consumers that do not need to pay upfront for what they buy online, but they can pay in installments over time. And again, this is very important for the economy, especially in current times. We have crowd lending platforms that collect money from investors and normal people and end users, and channel it to companies that need it. This is also known as a P2P lending, meaning peer-to-peer lending. I borrow from individuals, and I make sure that this money goes to other individuals, or it can be P2P lending platforms for companies as well. We have invoice financing, which I distinguish from purchase financing because this is based on receivables. So companies that are owed money from their customers, for example, and so advancing money backed by these receivables so that the company can operate and doesn't have disruptions in their cash flow. Especially important in certain regions of Southeast Asia, where you have manufacturing companies that are paid by their customers once the goods are received, maybe in Europe or in the United States. And so cash flow management is obviously an important topic. And then companies that just find opportunities for lending, so lead generation. Consumer financing is very big, especially in large countries like Indonesia or Vietnam at the moment. It's a trend that has been going on for a few years. Now, there is a pool, I think, a question that you can respond.
Yes, we are now launching the pool, and have you opened at least one business or personal account with a digital bank? So we ask all of our participants to vote. It's on your screen now, and it will. Let's say we will keep it open another 30 seconds or so. So make up your mind, and we will be here to comment the results afterwards. Okay, you have another 5 seconds if someone still wants to vote. And now we close the poll. And we have a strong yes, I would say. So we are discussing with people that have at least a digital bank account. Stefano, do you want to comment?
Sure. What's the percentage exactly?
Is 65% of yes and 35% of no.
Okay, which is not surprising, given that this is a seminar on a webinar of fintech, right? So I would expect that. So let's. So it's a trend, and it's obviously becoming more and more common to have accounts at banks that are not non-traditional ones. Let's talk a little bit about neobank. Neobank is a digital bank, so a bank that does not have physical branches, unlike traditional institutions. Normally, these are based on an app, and so they have a mobile presence. They're often mobile-first banks, and they are focused on customer experience. The other advantage is that they do not have normally the costs of traditional banks. Because they don't have branches, they can operate with a much smaller number of employees and still penetrate vast areas of the population. So for these reasons, they're called neobank, because they offer this different approach. Obviously, there are upsides and downsides, right, from neobanks. First of all, the regulation is not always that tight. And so it's important that governments regulate these new entities and make sure that they follow the rules that are in place for the common good, right? For ensuring the safety of credit and so on. Secondly, obviously, it's important that governments make sure that these companies are stable enough to handle the services that banks normally provide. But we see an interesting trend, which I try to summarize in this slide, which is that both fintech companies and traditional banks are trying to go digital and to become neobanks. On one hand, traditional banks are partnering more and more with service providers and fintechs that can allow them to go online and to serve their customers no longer through branches. On the other hand, you have the fintechs that are trying to provide more and more services that can serve customers in a digital way. They often meet together, in the sense that often neobanks are born from a cooperation between a traditional bank, which has been operating in a country with its licenses, and the fintech that can provide the technology that the traditional bank needs in order to develop in these new times and to serve customers as they expect to be served today, online and via mobile apps. Innovation means great opportunities. Obviously, it's that's why we're talking about fintech today. It's the moment of fintech, especially in this very region, Southeast Asia. Here I got a snapshot of how this fintech revolution has started in other countries, in the United States, in Europe, a few years ago. 2019, the focus was in South America, with new players popping up. And today we can say that the focus is on Southeast Asia. You can see some news titles here. They talk about Thailand and the Philippines, where the government is considering licensing for digital-only banks, which is obviously something very attractive for traditional banks. As you said, they are trying to go digital, and for fintech that can help these banks to achieve this goal. But also we have Vietnam that is pushing for a fintech regulatory sandbox to provide an environment where the government can control the development and the services provided by certain fintechs, make himself comfortable that these fintechs are adding value to the population and they cannot impact negatively the economy. And then once the government will be comfortable, it will allow fintechs to operate in the wide market. So it's a very interesting approach that is used by Vietnam, but also by Indonesia and by other countries. Now, why Southeast Asia? Obviously, it's one of the economies that is growing very fast in the world. We will see what the impact of COVID will be, obviously, in this scenario, but the fundamentals are there and they're solid. There is a population of 438 million people that are unbanked, and a lot of SMEs, which are the backbone of the economy of the Southeast Asian countries, that need access to credit and digital banking services. So the demand is definitely here and is definitely strong. Here we can go for another poll, which is going to ask us, about to give us an idea of the portion of unbanked population in Southeast Asia at the moment.
Yes, now we open the poll, and we invite all of you to make your own guess, of course, educated guess on the topic. You will have 1 minute, and then we will close the poll and comment the results. Okay, you still have another 20 seconds to vote, so take your chance. And I think that we can now show the results. So we have 39% that vote for 39%, which is a little bit confusing, but is the way it is. And then 26% voted for the option B, so 49% of population without a bank account, 22% for 59, and 30% for 69. So I would say that our audience is in favor of a lower portion of Vietnam population being without a bank account. So Stefano, would you mind to tell us the right answer?
Sure. So the right answer is 69%, which I think gives us an idea of the size of this opportunity and why banks really want to go digital, because that's the way to reach a broader spectrum of customers.
Okay, now we close the results and I will show you again your slides.
Thank you. Yeah, so this is about Vietnam, but I think it's indicative of also other Southeast Asian countries, right? 69% of unbanked adults, coupled with another very important information, which is that Southeast Asia has a huge mobile penetration among its population. So people use their cell phones, even though they do not have a bank account. And here is the opportunity that obviously traditional banks and fintech companies find, which is to use this mobile penetration to bring banking services, but also insurance services to a broader population. These are just some information on Vietnam. I thought it was important. Well, obviously it's the country where I am, but it gives an idea of the potential of Southeast Asia, I think, in general. Another important data that I wanted to mention is 70% of small and medium enterprises, which again, they made up almost half of the GDP of the country. They don't have access to loans from traditional financial institutions. Hence, a huge opportunity for fintechs. Recent events and future projections. Obviously, COVID, it's affecting the entire world and Southeast Asia, obviously. The Vietnamese government has done a particularly good job in containing COVID spreading. We had 0 deaths in Vietnam since the beginning of the pandemic, and currently we have 0 cases. This is not the situation in all the Southeast Asia countries, obviously, but I think it's important to know that one of the countries that has been the least affected by COVID is here in Southeast Asia, right? And obviously the perspective of recovery, Vietnam GDP now is projected to grow at 4% this year during the COVID and with the pandemic ongoing. So this is a clear sign also for investors that Southeast Asia is still an important destination and probably one of the most promising, even though we're in the middle of this crisis. And this is witnessed by some of the recent deals that have been closed in the fintech space, right? We had several fintech companies that raised multi-million-dollar tickets in the past couple months. The last one was PayFaz in Indonesia. They just raised $53 million in Series B, so quite impressive. And then also to be mentioned, the European Union Vietnam Free Trade Agreement that has just been sealed, and there is a similar agreement between Singapore and the European Union, and that is going to bring an additional inflow of business, investments, and export into these countries, despite the pandemic. It's kicking out now, and is going to push GDP growth throughout the region in a substantial way. And then obviously challenges, and I'm going to conclude in a minute. It's not just that easy to bring technology into the banking and financial system and get magical results, right? There are issues that fintech have to face. The first one is changing the current habits of the economic actors. Think of buy now, pay later. It has a huge potential, but people in Vietnam and in a number of other Southeast Asian countries, they still prefer to use cash in their payments. So it's not just a matter of making the technology available. You need to convince users that that is better for them and more convenient to use technology and, for example, e-payments rather than cash. So the potential is there, but the conversion is going to take some time because it's a matter of changing deeply ingrained habits, maybe in population that is rural, and so they need to understand that the value of an e-payment transaction and its added value is important for their benefits. Another issue is obviously the outdated technology infrastructure. Some countries are catching up very fast on that. Some countries like Singapore obviously are an example for the rest of the world. But we should not forget that not everywhere in Southeast Asia you have that kind of infrastructure on which you can plug in fintech services. Then there are the uncertainties related to the legal framework. This is obviously not an issue just for Southeast Asia. All over the world, even in Europe, legislation on fintech is constantly in motion. The reason being that fintech is itself, in motion and exploring new sectors and new services all the time, and so it's in constant need of new regulation and new guidelines for the government to ensure that it operates within safety. And then obviously COVID, which is the biggest question mark for every country in the region and therefore also for the fintech industry. In terms of case study, I just wanted to quickly mention some of these neobanks and challenger banks around the world. There are some players that are emerging in the SME neobanking in Europe, like Conto or Brex in the US. In who would be the player in Southeast Asia, it's open to be written. And this is what makes fintech in Southeast Asia at the moment so exciting. And the same goes for consumer banking. We have bigger players like Revolut in Europe and Monzo expanding around the world. But we don't have clear winning players in Southeast Asia. And also inside each country, it's not clear yet who will be dominating the market. And this is a game that is going to be decided in the next couple years. So the moment is really now, and it's really, really exciting to be in this sector at this moment and to be talking to you about this. So thank you very much for your attention. And now we can listen to Jonas, which can inform us about IP-related aspects of
thank you. Thank you, Stefano, for sharing your insight on the topic. Very, very interesting. And now I want to welcome Jonas to present on the IP related issues. Perfect. We see your screen. You can put it in full screen mode. Perfect. So, Jonas, the floor is yours.
Okay, thank you very much, Marta. So I'm Jonas Lindsay. I'm a patent attorney working for Marks & Clerk in Singapore, and I particularly work a lot in the kind of electronics and software areas, and that involves quite a lot of work with fintech-related inventions. So to start off with, I have a poll question for you all, and that's, have you ever registered any IP rights in Southeast Asia?
Okay, we open the poll for the public. Again, there is no right or wrong answer for this question. Please just vote, and you have the usual minute to express your opinion. So you still have, let's say, 5 seconds to finalize your votes. And I think that now we can show the results. So apparently 68% of people are not yet registered an IP in Southeast Asia, while only 80% are willing to do it, and only 40% have actually done it. It's surprising, but I hope that this presentation will show you why you should actually change this very, very soon. Jonas, do you have any comment?
I think it's quite interesting. I suppose it shows that at the moment there's a relatively large number of people who are less interested in registering IP rights, and although there are a reasonable proportion who haven't yet but do intend to, and possibly I hope at the end of this presentation that at least the number of not yet but intend to might increase slightly.
May change, yes. No, I don't see people filing while you are presenting, but maybe they will decide to do it in the future. Please go ahead.
Okay, so now I'll just give a sort of a brief overview of intellectual property, and then later in the presentation I'll go over the different types of IP that there are and how those may relate to fintech. So first of all, what is intellectual property? Intellectual property is an intangible property right. So IP rights give the owner a limited monopoly. For example, a patent protects an invention and gives the owner to stop others from using that invention. One thing that's quite important to stress is that IP rights are, in a way, negative rights. So a patent, for example, gives you the right to stop other people from using the invention that's defined in the patent, or a trademark gives you the right to stop other people from using a certain sign or symbol or trade name in relation to trading. So IP rights are negative rights that allow you to stop other people from doing certain things. The main IP rights are patents, which protect inventions, confidential information, which effectively is keeping information secret, so stopping other people from using information by keeping it as a secret, trademarks, which protect trade names, copyright, which prevents people from copying new works that you've created, and registered designs, again, which allows you to stop other people from using a design that you have created. IP rights are generally territorial, so they're limited to certain countries. So if you file a patent application in Vietnam, you can protect your invention in Vietnam with the patent that comes out of that patent application. But in order to stop someone using your invention also in Singapore, you would also have to have a patent in Singapore. IP rights are generally as well limited in duration, so patents last for 20 years. Registered designs last for between 10 and 25 years. Trademarks can potentially last forever, provided that you carry on renewing them. So now I have another poll question, and I may already know part of the answer to this from the earlier one. So I suspect that many of you haven't registered any IP rights, but those of you who have, if you could let us know which type of IP right you've already registered.
So we opened the poll. I'm curious to see how is the percentage going now, how is going to go. Of course, for those that answer that they are thinking about it, it could be useful to know which one you are considering, even if technically you still didn't register. I think it can be an interesting indication. Okay, let's say you have another 5 seconds to consider your answer. And now we show the results. Actually, it works in the sense that still 71% have not applied to register any IP, but we have a majority for trademark. Apparently, no one has registered a design or a GI. For the GI, I'm not so surprised, but the design is a nice thing. So if you want to, Jonas, to comment the results, and then we go back to the presentation.
I think in a way that's what I expected. Often applying for a patent is quite an involved process and takes quite a lot of energy and cost. And also it's limited to certain types of business, so you have to have an innovation, an invention that you're protecting. Whereas trademarks, there's kind of a broader scope of businesses that can register trademarks. So for example, if you run a shop or a trading business, you might not have any inventions of your own, but you might want to protect the name of your shop, trading name of your shop, or something like that. So in some way, I'm not surprised that the largest proportion have registered trademarks out of the options we have there.
Yeah, and also a trademark costs less than a patent, so that's also part of the point. Okay, we can go ahead, I think.
Okay, so why should you register IP? That, as Marta just said, there's a cost involved in registering a patent or a trademark, and that's a relatively high cost. So you need to have a reason for doing that. IP provides a limited monopoly, and the owner can profit from that monopoly. So if you have a patent for an invention in, say, Vietnam, that means you can sell products that incorporate that invention and no one else can. So that means you can derive a profit from that monopoly yourself. Alternatively, you can license your IP. By licensing your IP, you can receive a royalty from from the person you're licensing it to. So rather than running a business yourself, you can receive a royalty for licensing your IP to other people. There's a very wide range of licenses that are possible. For example, you can limit to certain products, you can limit to certain countries, you can have a cross license. So if for example, you have a patent that someone else wants to use and they have a patent that you want to use, you can agree a cross license. So to sort of, if you like, a swap. So in some situations, you may not be able to launch a product because they have a patent that blocks you, but you may have a patent that they want to license in return. Another important reason for registering IP is that it can attract investors, particularly with startup businesses. One of the most important assets they have is the IP. Effectively, a startup business is the IP, an idea, and the people. If there are no sort of, or there aren't a large amount of sort of physical assets to a startup business, the most important asset can be the IP in that company. So investors may look to see that company have some IP before they are willing to invest in it, so they are getting something in return for their investment. So now I'll just briefly introduce the different types of IP. So first of all, there are patents, and patents protect inventions. And the invention can be defined in a patent as a product, a process, or both. One of the most important points to make is that to be patentable, an invention has to be new, inventive, and include patentable subject matter. And in order to be new, that means it must have not been disclosed to the public before the patent application was filed. And a common problem that we encounter is that often people have disclosed an invention themselves, either by writing a scientific paper about it, by publishing it on a blog, by launching a product. And that disclosure by themselves, by the applicant themselves, can invalidate a patent that was, if the patent application was filed later on. Some countries have grace periods, so disclosures made by the inventors themselves are ignored when considering whether or not an invention is new, but that's not all countries. So a very important point to make is if you're considering filing a patent application for your invention, it's very important that you file that patent application before you disclose the invention. That will make it available to the public. The second requirement is that an invention must be inventive, and that means it must be not obvious. So not just a very small change to an existing product or something that anybody would easily think of. There has to be some kind of inventive step involved. And finally, the third requirement is that the subject matter must be patentable subject matter. And many fintech inventions are software-based, and the law on patentability of computer software is very complex and varies among countries. And some computer software is patentable, and some computer software isn't patentable. Generally, Southeast Asian countries follow a similar approach to the European Patent Office, and this involves considering whether a technical problem is solved by the software. And if the software solves purely like a business problem, then generally it's not considered to be patentable. So for example, a comparison website that selects products, so for example, a credit card or a bank account with the most beneficial interest rate would generally not be considered patentable, because the only problem that it's solving is a business-related problem, which is getting the best price or getting the best interest rate. And that's not considered to be a technical problem, and therefore the subject matter would be considered to be non-patentable. However, Singapore has a slightly more lenient approach. In Singapore, if software involves technical considerations, then but ultimately solves a non-technical problem, then it may still be considered to be patentable. In most Southeast Asian countries, and indeed most countries in the world, if there's either new hardware or technical considerations involved, such as improving security in a mobile banking application, then that would be considered patentable. Excuse me. The second type of intellectual property protection that's available is confidential information. And this, as I mentioned earlier on, involves protecting an idea or information by keeping it secret. One way that you can do that is if you have a process that's implemented on a server that the end users can't see, then you can protect that innovation by simply not allowing anyone to have access to the server. It only really works if the idea cannot be reverse engineered. So if it's a very simple innovation that once people see it, how it works, they can sort of reverse engineer it or work out how your innovation works, then you can't really protect it by keeping it secret. One benefit of it is that it can be applicable to non-patentable ideas. So if you had an idea that was purely a business-related idea that was implemented on a server that you could prevent people from seeing how it worked, then you may be able to protect that by keeping it confidential. An important thing to bear in mind is that patent applications are published after 18 months. So if you make a decision that you want to protect innovations by keeping them confidential, you have to make that choice before the patent application is published, because if you put some information in a patent application, it will eventually be published and will be available to for people to see. So you won't be able to protect it then by keeping it confidential. The third type of intellectual property is trademarks, and you can protect things like brand names, slogans, and logos with trademarks. In some countries, it's also possible to protect non-traditional marks such as 3D shapes, colors, and even smells. Trademarks are registered for specific classifications of goods and services. So that means when you file a trademark application, you have to include an indication of the brand name or the logo that you're protecting, but also the goods or services that you're going to be using that word mark or that logo in relation to. So, for example, if you had a fintech app, you might have a word mark for the name of the app, but you might also be able to protect the icon associated with that as a logo as well. With trademarks and indeed with other types of IP, it's important to check whether anyone else has something registered before you launch a product or enter new markets. So with trademarks, you can do a search to see if anyone else has registered the same name or the same logo or a similar logo, and also in relation to what types of goods and services they've registered that name or logo. The next type of intellectual property is copyright, and copyright gives the owner the right to prevent others from copying their work. Copyright exists once a piece of work has been recorded. So, for example, if you write a book, the act of writing down the book results in that being recorded, so you can prevent other people from copying that book. Copyright applies to software and computer program code. So if you write a new smartphone application, that would be protected by copyright. But it's important to bear in mind one of the limitations of copyright is that it protects the implementation of an idea and not the idea itself. So if you write, for example, a computer program smartphone application that for online banking that has certain online banking features, you can stop other people from copying your code and using your code to make their own smartphone application. But what you can't use copyright to do is stop other people from writing their own code that involves a similar idea. So, so copyright has some limitations in that regard. And finally, the final type of intellectual property right I'm briefly going to talk about is registered designs. And registered designs generally relate to physical products, and they protect the appearance of the product, so what it looks like, but not how it works. Some Southeast Asian countries, including Singapore and Thailand, the Philippines and Malaysia, allow you to register graphical user interfaces as registered designs. And this is potentially relevant to, for example, smartphone applications. If you have a very distinctive app, or an app that has a very distinctive appearance, you may be able to register the appearance of that app as a registered design. The cost of registering a design is relatively low compared to the cost of preparing and filing a patent application. However, it's important to bear in mind that registered designs protect the appearance and not the underlying functionality. So, for example, someone else could make a product that worked in the same way, but just had a very different appearance, and they wouldn't infringe a registered design. So now I'm going to talk about a couple of examples. And the first example is a German company that developed a device that allows commercial operators to accept payments, but without having to install a complicated point of sale terminal. And the main markets for this device were countries without sophisticated banking infrastructure, so places like Indonesia and Thailand in Southeast Asia. And now we have another poll question, which is, just a second, how do you think would be the best way to protect this innovation? So this,
yeah, we will open the poll, and the answer, of course, file a patent application, file trademark application, file registered design application, or other type of IP protection. Just to repeat, the case is a German company that has a device that allows commercial operators to accept mobile payments without installing a complex point-on-sale terminal. And the main market are the countries without a sophisticated infrastructure, for example, Indonesia and Thailand. We leave you the time to vote. Of course, think about it a little bit, but don't hold yourself, because this is not school. So please vote. Okay, let's say you have another 5 to 6 seconds. A is file a patent, trademark, design, or other kind of IP. And I think we can now show the results. So we have a split result. 31% vote for patent, and another 31% vote for other type of IP protection, while 23% vote about design and 50% vote for trademark. So, Jonas, do you want to comment?
Yes, I suppose that's an interesting spread of different types. And presumably the other type of IP protection people might have been considering was confidential information or copyright. But in this case, if I can move on to the next slide.
Yeah, we can close the results. There is also the option, do nothing and hope for the best.
So actually, in this case, what the company did was they filed a patent application, and they filed what's known as a PCT application, which means they can file one application initially, and then 30 months later, they can decide in which countries to file patent applications in, or national phase applications in. And that, so they initially filed a PCT application in their home country, in Germany, and then later on they filed national phase applications in Indonesia and Thailand based on the PCT application. And by doing this, they were able to protect their invention in Indonesia and Thailand. And because the invention was related to hardware, so a physical device, it was possible to protect it with a patent, because generally hardware innovations can be protected in almost all countries with patents. Software innovations can be protected in most countries, but it depends a bit more on exactly how the software works and what the software does. But with a hardware invention, it's relatively consistent, that as long as it involves something that's new and that's inventive, then generally it can be protected in most countries, including, for example, Indonesia and Thailand in Southeast Asia. And now we move on to a second case study. And this is a French company which developed an online trading platform that included a dashboard that displays the current prices of financial products, so things like share prices or unit trusts, in an intuitive and user-friendly way. So here it was more how they were presenting the data or the prices that was important, rather than how this underlying system works. So again, this is the final poll question. How would you protect this second fintech product?
Yeah, so now we open the poll again, and the answers, the possible answers are the same than before. So patent, trademark, design, or the other type of IP protection. Please think about this case, which is different from the previous one. It's an online trading platform with a dashboard displaying the current prices of financial product in an intuitive and user-friendly way. So it's a slightly different product from what we have seen in the previous case. So think about it a little bit more. We give you another 20 seconds to make up your mind. So you still have another 5 seconds to vote. Make up your mind. And I think now we can show the results. So we have 42% for design, still 33% for patent. No one thought about trademark, and 25% for other type of IP that, again, I will assume will be trade secret or copyright. Jonas, do you want to comment?
Yes, I mean, I think it sort of shows people are beginning to understanding a bit more about the different types of rights that are involved, and because in this case the sort of the key part was the important part of the product was what it looked like, rather than how it worked. So in that case, it seems that people are going towards registered designs because of that can protect how it looks. And as I mentioned earlier on, in some Southeast Asian countries,
And also something like the usability of a platform or the usability of an app are key consideration when developing it, but the only way to protect them is under the design. I think we can now close the poll and resume the presentation. Yeah.
Okay. So in this case, the company registered or filed a registered design application in Singapore to register the appearance as part of the graphical user interface. And that was useful for the company in this case to demonstrate to their investors that their trading platform was protected in Singapore. And this kind of demonstrates that for some fintech products, and it's often the case with things like smartphone applications, that it's very difficult to get patent protection because most of the underlying considerations are either kind of how data looks and how it's presented, or kind of a method of doing business, and those are very difficult to protect with a patent. So registered designs provide companies with an alternative type of IP protection that allows them to protect this kind of product. As I sort of alluded to earlier on, while that gives some protection, it doesn't necessarily give complete protection because, for example, someone else can make another online trading platform that worked in a very similar way, but just had a very different appearance, and then they wouldn't infringe the design registration for the graphical user interface. But in this case, because the key selling point of the product was the way the graphical user interface looked, it was a very efficient way for the company to protect their product. And now, sort of moving on to my final slide, there's a variety of different types of IP protection are available for fintech. You can often get strong protection by a mix of types of IP protection. So, for example, you can register a trademark for a trade name. You can register a trademark for an icon or a logo of an application. But you can also file a patent application for how it works if there's some technical considerations of how it works. Or you could register a design for how it looks. You could consider keeping parts of it secret so that other people couldn't use it because of the secrets. Patents are often the strongest type of protection because they protect how something works, sort of the underlying thing of how something works. But they're generally the most expensive, and it can also take a lot of time, and not all innovations can be protected by a patent, particularly if there are more business method considerations involved. So things like confidential information and registered designs may also be very useful. But it's very important to consider the strategy that you're going to follow early on, because once you disclose your product or launch your product, you can take away the option of filing a patent application, because that disclosure or that launch can count against any patent application you file later on. And that's the end of my presentation.
Yes, thank you, Jonas. Thanks a lot for this very interesting and interactive presentation. We are now opening the floor for questions. First, so I would like to have also Stefano here for the Q&A.
Sure.
So first of all, we have already a question for you. For Stefano, what kind of players will survive the post-COVID impact, and how will this impact the regulatory outlook in Vietnam as far as the P2P lending is concerned? And I will put it together with another question because it's similar. How digital transformation affect fintech? And what is the challenge and opportunities of Google Cloud platform in fintech Asia? So this is definitely a question for Stefano.
It's 4 questions, not one.
Yeah.
Okay, so well, Google, well, definitely Google Cloud and a number of other big tech companies from the US are going to play a big role in this fintech revolution that is happening. It seems that the intention of these big Silicon Valley companies is not to enter into the fintech sectors themselves or to become a bank or a neobank. I have the idea, I think, is that they will be making more money if they provide services that can support fintech and banks themselves to become digital and to provide fintech services. So how will this impact? Obviously, they are providing the infrastructure that all these fintech players and banks will be paying for. So I think they're playing smartly, and they will enable fintech changes to happen more quickly. I think that applies, yes, to Google, Amazon, these kind of players. In terms of impact of COVID, well, what we're seeing is that small fintechs that were, going through the seed fundraising and maybe 1 or 2 employees and short runway may have been impacted heavily by COVID. On the other hand, it's probably an opportunity for those fintechs that are already more solid to basically get rid of smaller competitors that may challenge them in the future. In terms of impact on the regulation, well, I think that, again, COVID is making more and more clear how important it is to provide lending to companies in order to survive difficult times. And several governments are understanding how fintech companies can play a role into this. So I think that there will be even more attention by governments, and so even more attention by the regulators for allowing, but also providing guidelines and discipline to fintechs, so that in order to channel their potential towards a good outcome. I think that is also a good opportunity for governments to continue what they are doing, which is policing and making sure that instead there are no companies that have not a good social impact with their practices, and make sure that they are under strict scrutiny as it should be. But I hope this answers the questions, but if there is any follow-up on here.
Yes, of course. I encourage everyone to first of all keep posting the questions, but also like to follow up later on with us directly or to the speakers. We have a question for Jonas. It's from a company that is asking if they have a patent in Europe, and they want to know if they can patent in Southeast Asia, like they bring their patent to the region. If they can do that, how they can do that, etc.
It depends on when they filed their patent application in Europe, because as I mentioned in the presentation, if you disclose something, then you can't later on file a patent application for it, because that disclosure could count against your patent application. But if you initially file a patent application, so for example, if you're a German company and you file a German patent application, you have 1 year in which you can file patent applications in other countries and claim back the original filing date of the German patent application. There's also an option which is known as the PCT, or Patent Cooperation Treaty, where if you file a PCT application, you have 30 months from your initial filing date to file patent applications in other countries. And again, that sort of claims back the original filing date, so you don't have to worry about whether you disclosed your invention in between. So in this case, if the company, if their European patent application has already been published and they haven't filed a PCT application, then it may be very difficult for them to protect their invention in Southeast Asia. But if they have a PCT application and the 30 months hasn't expired yet, then they have the option to file applications in Southeast Asian countries.
Yes, basically patents are, let's say, timing in patent particularly important, particularly relevant. Okay, there is another question. It's asking that their competitor just launched an app that is similar to their. What should they do?
So I suppose initially we should think about what IP rights they have. So have they filed a patent application, a registered design, or a trademark, and what IP do they have in their own app? Also, it's probably important to think about what IP the competitor might have, because the competitor might have filed, say, a patent application a while ago and have only just launched their product. So I would suggest sort of the first action to take is to look at what IP you have that you may be able to enforce against the competitor, but also to think about what the competitor may have that they could enforce against you, and then from there kind of work out a strategy whether it's possible to sort of to either license something to the competitor or to make the competitor stop using their app if they're infringing your trademark or your patent in the app.
Okay, so for the moment, I don't see other questions. Is this a good time to remember to everyone that the recording of the webinar will be available on YouTube alongside the slides deck? I will also remember to everyone that we have already published actually our fintech guide that is available on our website and is, by the way, drafted with the cooperation of Jonas. So thanks again. And also, I want to take this 2 minutes to advertise a new service. We have also decided to open the floor for one-to-one consultations. So if you have any question or like you want to discuss a little bit of IP strategy, the service is always free. And even if you don't have a specific question, you just want to receive generic information, you can book a meeting with us and discuss, and then we will go into the details and everything that can be needed. As I said, everything is for free, consultation, materials, everything. It's now time to thank our 2 speakers for participating today, and to thank also all the attendees to bear with us for also slightly longer than 1 hour. And on the screen, you can see all our informations to contact us. So thanks again, Jonas. Thanks again, Stefano, and see you next time.
Thank you.